Hi friends, today we'll discuss what is P2P lending. So normally banks and financial institutions will be lending. How they'll get the money? They'll get the money from the customers through savings account, current account, fixed deposit, recurring deposits, or daily deposits, or flexi deposit. Through these products, banks and financial institutions will get the money, and the same money will be given to business people or individuals as a loan. So this is called lending. So what is peer-to-peer lending? Peer-to-peer lending means, so whoever taking the loan is a borrower, whoever giving the money to the bank or financial institution, there are the investors. But in this peer-to-peer lending, there won't be any bank and financial institution. Directly borrower and investor, they'll contact and they'll start exchange the money. So borrower says, I want 10,000 rupees for 90 days. Then investor can say like, okay, I can give you 10,000 rupees for rate of interest 7% for 90 days. So in this way, P2P lending, borrowers and investors directly they will be interacting, and borrower will give the money to the investor will give the money to the borrower. Borrower will pay on due date or monthly repayments. Investors have the option to lend small amounts to multiple borrowers to diversify their investment. For example, as an investor, if you are given 1 lakh rupees to bank, but you doesn't know whom this 1 lakh has taken. But here you have an option. If you are investing 1 lakh, 1 lakh you can give it to one person, or you can give it to two persons, you can give it to three persons. You can select your borrower. Okay, 20. If a borrower is good, you can give 50,000. If another borrower you feel it is risky, then you can give 20,000 as per his portfolio. So you have option to select the borrower, and you can fix the rate of interest also. So what are the important points in P2P lending? Create borrower. Okay, so borrower has to be created, and loan assessment, and make a loan available. Commitments from the investor. Yes, investor says I'll pay. Physical verification and documentation, loan disbursement and repayments by the borrower to investor. These are the important points. Okay, what are the advantages? For the borrower, he'll get a loan for lesser rate, but investors, he'll get a higher return. If you take a bank or financial institution, if you invest, you'll get 7 to 8%. But if you want a loan, it will be 12, 13, 14, 15. Microfinance, it will be 25, 26. Even unsecured personal loans, it is like 16, 18, 20%. Okay. So here, investor will get a higher rate of interest, and borrower will get funds for lower rate of interest. So it will be quick. It will not take weeks, months. It will be done in 1 or 2 days. No prepayment penalty. If borrower wants to repay before the maturity, there won't be any penalties. So funding for short term also available. For example, somebody wants for money for 30 days, 40 days. Yes, if the investor is ready, you can get money for 30 days also. So if your loan required, then you have to register as a borrower. Then your loan application will be reviewed, loan approval will be done. Then rate of interest and risk category will be fixed as per your portfolio, as per your profile. Funding will be done from the investor, physical verification, documentation, and disbursement, where the money will be transferred from uh, investor to borrower, and repayment through NACH every month or at a particular date. If I am an investor, I'll register as an investor, then I'll check for the active borrowers list, then invest the money, loan amount funded, physical verification and documentation, fund transfer to borrower, and receive monthly repayments, or on a particular date, I'll receive the money. Thank you friends. If you like my video, please subscribe and please share with your friends. And if you need any additional information or additional topics, please mention in the comment column so that I can prepare a relevant videos. Thank you friends.